Welcome to Explain the Charts. Today, July 28th, 2025, we're dissecting GBPUSD, a pair currently capturing significant market attention. Our journey begins by contextualizing the market with the latest news, then we'll deep dive into the candlestick charts. Looking at recent Google search results, the GBPUSD has been struggling to gather momentum and alternating gains with losses in the low 1.3400s. The current rate from some sources is cited around 1.33549, indicating a slight decrease over the past 24 hours. A key factor is the US dollar, which outperforms its peers as worries of an incomplete sentiment suggesting risk-off flows benefiting the greenback. Conflicting reports mention former President Trump's belief that the Federal Reserve has to cut interest rates, contrasting with a strengthening dollar on Fed outlook, which implies more hawkish expectations for the Fed. This dichotomy creates uncertainty, potentially leading to volatility in currency pairs like GBPUSD. Trade tensions are also on the horizon, with talks of new tariffs, which could further influence currency flows. One report from Forex Factory anticipates massive profits from this swing down, with a target of 1.32826, hinting at a strong bearish sentiment. However, another perspective from UB Group suggests a major support at 1.3365 is unlikely to come into view, implying some underlying resilience or a different short-term outlook. Now, let's turn our attention to the daily chart to see how these fundamental narratives align with price action. From March 2024, GBPUSD has generally been in an uptrend, forming a series of higher lows and higher highs. We can observe a significant rally from the lows of 1.22 in January 2025, pushing all the way up to a peak of 1.3724 in late June 2025. This long-term perspective suggests underlying strength for the pound against the dollar, despite recent news. However, we've seen a noticeable pullback from that June high, indicating a potential short-term reversal or a healthy correction within this larger trend. The current close, as of our latest data on July 27th, is 1.34372, which is notably lower than the June peak. Zooming in on the daily chart for the period from mid-June to late July 2025, we clearly see the recent bearish pressure. The price broke below immediate swing lows, confirming the short-term downtrend. This aligns with the news snippets suggesting GBPUSD is struggling and the dollar is strengthening. The level around 1.3550 acted as a strong resistance zone after the June peak, as multiple candles struggled to close above it in July. Transitioning to the 1-hour chart from early July, we get a granular view of the recent sell-off. A clear pattern of lower highs and lower lows has been established since the initial drop from the 1.37 range. We can see a brief period of consolidation and a slight bounce around the 1.35 region around July 9th to 10th, but this proved to be temporary resistance. The consistent selling pressure and failure to hold higher levels confirm the short-term bearish bias that the news suggests. Volumes on the daily chart during the declines have also been relatively high, indicating conviction behind the moves. Now, let's examine the 15-minute chart, covering the most recent days from July 23rd to July 27th. This time frame shows the immediate price action around the 1.34 to 1.35 levels. We can observe periods of tight consolidation, particularly around 1.358 to 1.359 on July 23rd, followed by a sharp drop. The price then found some stability around 1.349, bouncing slightly towards 1.352, but failed to sustain the move. The very latest candles show price hovering around 1.343 to 1.344, currently holding above the 1.3400 threshold mentioned in the news as a point of struggle. The range has narrowed significantly in the last 24 hours of available data, suggesting a period of indecision or accumulation/distribution before the next major move. Notice the relatively lower transaction volumes on these smaller timeframes compared to the daily, which is common during consolidation phases or off-peak trading hours. So, what does this mean for traders? Let's consider the reasons to be bullish or bearish for GBPUSD, both short and long term. A bullish case, especially long-term, rests on the underlying uptrend observed since early 2024. Dips could be viewed as buying opportunities within this trend. If the critical support level of 1.3365, highlighted by UB Group, holds firmly, it could signal the end of the current correction and a rebound. A sustained breakout above 1.3500 on the daily chart would reinforce a bullish short-term outlook, invalidating the recent bearish momentum. However, the immediate bearish sentiment from news reports, coupled with the recent lower highs and lows on the charts, presents a compelling bearish short-term case. The US dollar's strengthening against peers suggests a broader market shift that could push GBPUSD lower. If GBPUSD breaks decisively below 1.3365, particularly with increased selling volume, the bearish target of 1.32826 becomes much more likely, with a high probability of around 70% in such a scenario. A breach of 1.3300, the untested demand zone mentioned in the news, would signal a significant bearish continuation, making further declines highly probable. This could be reinforced by any hawkish statements from the Federal Reserve or further deterioration in global trade relations. In recap, the important price levels to watch are the immediate resistance around 1.3500 and the more significant resistance at the recent June high of 1.3724. On the downside, key support levels are 1.3365, a major support level that has been widely watched, and the psychological and technical demand zone at 1.3300. The immediate intraday bias, as mentioned by Action Forex, is neutral as long as 1.3363 holds, suggesting range-bound trading until a clear break occurs. For a bullish confirmation, look for a daily close above 1.3500, indicating buying strength and a potential reversal of the short-term downtrend. For a bearish confirmation, a sustained break below 1.3365 on high volume would open the path to the 1.32826 target and potentially further towards 1.3250. Keep a close eye on upcoming economic data releases, especially from the US and UK, as these will likely dictate the next significant move for GBPUSD. Also, watch for any fresh statements from central banks or developments in global trade negotiations, as these external factors can rapidly shift market sentiment.